Hey everybody, and welcome to Stock Abilities. Before I get started, make sure to subscribe to the channel for more content just like this. I'm going to be covering the Tesla S&P inclusion and why it likely didn't get inclusion as opposed to other companies like Etsy here. And it's according to CNBC, basically they said that it fell after hours on Friday after Etsy, Teradyne, and Catalent were added to the S&P 500 index, but Elon Musk's electric car maker was not. They do a whole lot of other stuff too. And although they do meet the qualifications that basically allow the potential to be added to the S&P index, there's a lot going on through the index committee to decide on who gets entered into it and who doesn't. It's kind of a quantitative aspect, and to kind of balance the S&P, the S&P is kind of like a picture statement of the overall market, and Tesla, in my opinion, should never be added due to the volatility of it. But obviously, they can add it and remove them at any given point from the companies they just added, and it all depends on your perspective of what you think of Tesla as a company. uh, just to get in a little bit about that, the index committee's mission, as they say, is maintaining the S&P 500 to represent the U.S. equity market with focus on the large cap segment. And the committee is not trying to pick stocks to beat the market, essentially, but more like a stable company. And due to the volatility, just alone on Tesla with its absurd PE ratio, you're expecting a move in the hundreds or thousands of times its actual value of the earnings that it's bringing in. And obviously, that alone can become somewhat of an issue for that absurd valuation. Just a quick Google here says that they're doing a PE ratio of 1,047 and 53. Just a quick cap of here, the price to earnings ratio, PE ratio, is the ratio for valuing a company that measures its current share price relative to its per share earnings. And essentially, that means that they're trading at a heavy multiple of what their current earnings are. Not only that, but they're taking on heavy debt with extra loans and everything to get all their factories more going and to push out these vehicles and everything. And even with all of that going on, they're still not making very much profit comparatively to the loans. So the income to debt ratio is very unstable. They're making far less income than the debt that they're incurring to try to grow and expand. I get that it's a car company and that they're doing all this other stuff, but that risk for stabilization is obviously an issue. And going a little bit further here, not only once did they potentially bankrupt in 2008, but here in 2019 to 2020, they almost went bankrupt yet again. Musk himself said this is a lot of money, but can actually only give us about 10 months of the Q1 burn rate to achieve break even. And this is, of course, a little bit of an outdated article. They had a little bit more stable financials in 2020, but those financials, in my opinion, were a little bit on the deceptive side considering the amount of loans they took comparative to the income that they brought in. So it's kind of like they're trying to force themselves into the S&P 500, but they don't really technically qualify for it overall. They're not a very stable company. Uh, they're trying to stay balanced. They're trying to give a reasonable growth, but in my opinion, it's a house of cards that's not going to last very long. You got the Hyperloop, of course. Overall, basically a failure. They spent a lot of monies on that. That's just burned monies. As they said, far from its promise of rocketing cities into the future, Hyperloop momentum appears to be slowing, with several states and local governments that once flirted with the idea. In Virginia, the idea died after officials examined eh, Musk's Hyperloop test funnel. In Chicago this month, leading mayoral candidates appeared to dismiss much hype plans for Hyperloop in their city. And in Colorado, Hyperloop company went out of business before completing a publicly funded feasibility study. It's Hyperloop. I don't know if you guys know the history. This has been kind of a snake oil salesman pitch going back. I think it was like to the 60s, 70s. They had these visions of the future and everything, and how incredible it's going to be. The only thing that really came out of it was that kind of like tubing system you see at banks and things like that. And they use it at some factories and other things too. But in regards to the practicality of transporting people, it hasn't really become a reality yet. I think in the future it might be, but I don't believe that Tesla is going to be the one to do it. They spend an absurd amount of money. Then you go to Tesla's a solar company. This is not biased reviews. This is the current ratings of Tesla right now. They have a 1.5 out of 5 stars. This is out of 459 reviews. Not only is that a bad thing, but then they have the solar cost and then the practicality of their explanation. This is getting more into solar costs that are still absurd even to this day. They say 2.8 years to pay it back. Then, of course, you know, $2,000 a year maybe is the average, maybe a little bit more, a little bit less if you're an individual. I think from a business point of view, the solar systems might be more practical, but for an individual to use them, it's not a feasible idea. Just some recent reviews. I had solar panels installed by Solar City, Elon Musk's cousin. Service is great, love them. And then out of nowhere, their customer service is terrible. They got the monies basically, and then they ignored the client, is essentially what a lot of these reviews say. Here's one from 8/20/2020. This was less than a month ago for this particular review. The first year, Tesla service was fairly quick, so our downtime was minimal. Lately, it sucks, and then obviously they're having trouble even getting a hold of anybody at Tesla. Essentially, they kind of moved on to their next hype or their next exciting venture, and they just kind of abandoned their old products and services. That seems to be the trend with Tesla. Going on to something a little bit further here, you have basically they're eyeing international expansion of the fledgling insurance business.
Stock of the day, Tesla, way up this morning.
And basically, they've only been doing the insurance for about a year or so, and since said point, they've progressed a little bit, and it's kind of an interesting thing that might be the saving grace of Tesla is that the insurance itself might help to propel it, but you had SoftBank and other people here pushing the stock a little bit higher due to the billions invested in tech itself. Of course, as you can see here, it's really up to you whether you want to consider Tesla as a feasible stock. But from basically 2017 to about 2019, it really didn't do anything. A lot of the action on Tesla happened during pandemic when everybody's getting all these billions of dollars of grants, and then people are taking advantage of everybody at home, and investors are going a little bit crazy. And, just from looking at this overall chart, this alone doesn't look stable, but then you go back to what I said at the beginning of the video. You're doing 1,047.53 PE ratio. This is just absurd for a company to maintain to any degree, no matter how profitable they are and how good they are. So you got to think back to that initial PE ratio and to understand fully what that means, and to realize that the stability of Tesla as a company, Tesla, in my opinion, is not the future. There's going to be EV companies, there are going to be innovations, but Tesla, in my opinion, can't really manage the amount of debt that they're incurring comparative to the income that they're making. My guess is you're looking at maybe another 2 to 3 years at most before they likely bankrupt. People buy their assets and things like that. And I thank you guys for listening to this whole video. I just wanted to give a little quick input on my opinions on Tesla as itself, and the reason why I didn't get into the S&P inclusion aspect. Likely the fact that it almost bankrupted itself 2 times, on top of which the income to debt ratio not very stable. They're taking on billions of dollars of debt, but they're not really making the billions of dollars back. They keep making promises like, the Hyperloop and other things like that ultimately fade into obscurity and don't really innovate or change. He's working on a Neuralink and some other new things that are basically concepts from already established companies like MDT that you could be looking into instead of contemplating whether it's a good idea to go with Elon for that in particular. In the end, Elon is somewhat of a visionary, somewhat of a not. It kind of depends how you value, future perspective of things that are old and tried concept that maybe might become innovative in the next 5 to 10 years. But a lot of the hype around Tesla and Elon is not very stable, and going back all the way back to its share price here, it recently did a 5-1 split. It was trading at $2,200 a share, which is just absurd. Even with its split, it's still struggling to maintain that, the peak and that hype. They have a battery day coming up that might push it up a little bit more. I guess we'll see. Thank you for listening in and have a great day.